Well, new data is highlighting just how tight the housing market still is. Existing home sales essentially flat in May compared to April, but compared to a year ago, sales were down 20%. Joining us now is National Association of Realtors Chief Economist Lawrence Yun. Lawrence, good to have you back on the show again. I'm looking at inventory levels here for May, at least. They are the lowest dating back to 1999. Is there any relief in
Yes.
sight?
The low inventory is hindering sales potential. And you can see that by the fact that 1/3 of the sold property in the latest month were sold above list price, meaning multiple offers are happening. So the shortage of inventory is not fully satisfying all the buyers in the marketplace. So once we get more inventory, one can easily anticipate a boost to sales. And of course, mortgage rate also is a big important factor in the housing sector.
Lawrence, you mentioned getting more inventory eventually, and that obviously is going to free up some of the availability here for potential home buyers. What does that timeline, though, look like given the fact that we're in this uncertain economic environment and people simply aren't moving from their homes given the lower rates that they locked in over the last 2 years, 3 years?
Eventually it has to be the home builders. They have to build more in line with the population growth and the job growth. Let's remember the total number of people working today is about 4 million above pre-pandemic levels. So we have far more people, but fewer sales activity because of limited inventory. But the good news regarding the builders is that the latest data is showing single family home construction housing starts at near 1 million. So we have not seen that level in the 10 years prior to the pandemic. So builders are ramping up, their profits are turning in, and there's a financial incentive to produce more. But it's gonna take time. So in the short-term measure, one of the things that our organization is talking to members of Congress is to say, can we incentivize some of the mom and pop real estate investors to unload, possibly by lowering the capital gains tax temporarily, so we can immediately bring more inventory to the market so that first-time buyers who have been struggling, maybe they get more choices.
Yeah, well, what's the prospect of that? I mean, what kind of timeline are you looking at the potential for that policy going forward?
We are in the discussion because I think people understand, the country understand, that we need to have a steady ladder towards home ownership. We don't want to have a divided society where homeowners are getting substantial housing wealth, which has been the case in recent years, while the renters just frustrated, like not making any progress in life. So to assure that first-time buyers, who incidentally were below 30% of all purchases, normal level will be closer to 40%. So we want that first-time buyer, younger generation, to taste the home ownership and the wealth that goes along with it. But right now is a very difficult, challenging circumstances. So we have to get the communication started regarding getting more investor inventory onto the market, put a condition to say you only get capital gains tax relief if it's sold to owner occupant or the first-time buyers, so that it's not an investor to investor transaction.
Lawrence, what does all this mean then for prices going forward? Because the fact that there is still this pent-up demand, low inventory, that sort of put a floor on prices. Is that going to continue to be the case here going forward, do you think?
The prices have been roughly stable in terms of the national median price, even though we do see some variation. Upper end market, yes, prices are coming down. And for people looking to buy those expensive homes, there is a better chance for the buyers to get that better price negotiation. But not the case for the mid-price or more affordable price range homes where they're attracting multiple offers. And also out in the West region, we are seeing about 5% reduction in median prices. So there is some variation, but with the mortgage rate possibly stabilizing or possibly even decreasing later in the year, let's hope that the Fed, as they get more incoming data, they see that inflation is much calmer, rents are much calmer, and they don't have to raise interest rate. Well, that's going to be very favorable for mortgage rates, and the buyers will be coming in. The key question is whether we will have sufficient supply.
Lawrence, from a buyer side, who's actually in the market looking? I mean, you'd think that the things that you've highlighted there, whether it is the prices that we've seen, the mortgage rates that have gone up, a lot of first-time homeowners or prospective home buyers have essentially been pushed out.
So the buyers, interestingly, the real estate investors have actually stepped away. So we are finding that small decrease among real estate investors. So these are the people who are buying right now are essentially the homeowners who are exchanging home, either trade up buyers or trade down buyers. And they can do so because they acquire sizable housing wealth over the years. They sell their home, use the proceed as a down payment for their next home purchase. So right now, it's essentially the homeowners exchanging properties. The first-time buyers are struggling, and the real estate investors are beginning to step away from the market.
All right, Lauren June, we have to leave it there. Thanks for joining today.